So how do the private equity investors make an investment to the target? So a deal structure, it means the process of determining how to approach acquisitions. Especially they're focusing on financial structures for maximum returns, and they want to minimize risk. So private equities, when they do the deal structuring, they blend various tranches of investment like bonds, preferred equity, loans, all sorts of financial instruments. So a typical deal structure will involve equity investors, bond investors, and subordinated bond investors. And usually equity investors will invest around 20 to 50% of the total deal in a typical leveraged buyout deal. The senior bond investors about 30 to 40%, and the subordinated bond investors the rest. But this is just an example of the number of figures. They can vary a lot by each individual deal structure. These investors will form a special purpose company, and this special purpose company will merge usually with the target company, which as a result the private equities will become the shareholders of the target. And lastly, sometimes there are strategic investors as well in the deal structure, but it would be relatively uncommon for the deal structure to have both PEs and strategic investors at the same time. Let's see one of the most famous examples of structuring deals. This is a very famous acquisition deal by Silver Lake Partners acquiring Dell. So this was a very huge company. It was a $24 billion deal, so it was a quite huge deal at that time. Since it was just too big, there was a lot of participants related to this deal. So you can see that there's almost like nine participants just in this diagram. Silver Lake Partners was the main investors in terms of equity. They invested $1.4 billion in equity. But also Michael Dell and his family also participated in this deal as well. A huge portion of the deal was financed by debt. Bank of America, Barclays, Credit Suisse, RBC. So investment banks, ordinary banks, they committed to several different loans worth a total of 13.75 billion, so a huge amount. Strategic investors like Microsoft also committed to purchase up to 2 billion of subordinated bonds. So they're not participating as equity, but rather as debt. And because the company also had some existing cash and equivalents, they've also utilized these $3 billion cash and equivalents to source this deal. This is just one example of a private equity deal structure. As we move on to our courses, we'll see a lot of different deal structures, and in our financial model we'll build our own deal structure to acquire a hypothetical chicken franchise company, which will be much more simple than the deal structure that we're looking at right now. But once you understand it, I think you'll be able to apply it to much more complicated deal structures.